Let's dive deeper into the market action here as we take stock of the close. Abigail, what were you watching at the close?
Scarlett, once again, I'm thinking about the Russell 2000. We have some really interesting trading action on the day at the highs. That small cap index up 1.1% as you were just looking at, closing up just 0.3%. So the fact that you have that growthier leading index doing that sort of a reversal on the day, still up, but not, the kind of close that some traders probably want to see. Over the last year, the Russell 2000 has been unable to get out of its own way. So today, sort of a micro version of that. We see the last all-time high more than a year ago. This year really stuck in this range around its 200-day moving average. To the positive, the 200-day moving average is starting to rise. But we see here, Taylor, that the Russell 2000 can't quite get above 1,600. It's been above it twice this week, but now back below it. The RSI is caught in the range. We may just see a continued consolidation of the recent gains here, but keep an eye on this Russell 2000 small cap index that, again, has simply not been able to put in an all-time high like the other major averages, Taylor.
Well, Abigail, from the equity markets back over into my world of some of the bond markets, I wanted to take a look at Treasuries. You have yields really rising today as prices sell off a little bit. So I'm, of course, taking a look at that 10-year. Pretty big moves. We're back up now to a 190, the highest level going back since the beginning of July. And then this chart that we're showing here is the 5-day move. So in the last 5 days, you've now had a 23 basis point move. 2019 has really brought in a lot of big 5-day swings in really both directions here. And then what that means is today it's translating into a little bit of a bear steepener. We're having long end of those yields really rise much more, bringing the 3-month 10-year back up to about 35 basis points or so. That is now the steepest going back since about March of this year. And Abigail, like you were saying, that's in part why you're seeing a little bit of this risk on rally today, in part fueled by a little bit of a sell-off in yields. Renita.
Thanks, Taylor. Back over into the equities market where I'm looking at Party City, which is not having a party because the stock dropped to its record low today. And this was after reporting its own quarterly earnings. Take a look at the intraday action. And the company cut its annual revenue and profit forecast for the second time. And it was a real Halloween scare because sales for the holiday actually fell 3.2% from the year prior. It's usually a successful time of year for the party retailer, favoring customers, or costumes rather, in the third quarter for Halloween. But this is the weakest third quarter since at least 2013 for gross profit. And it had a helium shortage as well as higher freight and distribution costs that added to some of those results. And a small bright spot, however, came in the company's digital business, including its buy online, pickup in and store and marketplace sales, which showed stronger growth, according to the CEO.